thank you for stopping by my daily market report. My name is Mike, and this market report is about mortgage rates, what impacts them on a daily basis. We get more into the trends and what's impacting them on that particular day. We don't get into the rate quotes, but if you guys would like a rate quote, please feel free to reach out to me at any time. I am a lender, and I do work with a national lender. I'm an LO with a national lender. So if you got questions about mortgage rates or mortgage programs, please also feel free to reach out. We can help you with your refinance or purchase transactions if you need to get it pre-approved and then finance it. We're here for you guys. In the meanwhile, why don't we jump right into the report here? We do got a couple economic data to report on the economic calendar. We'll start off the Philly Fed Index. This is the index that measures the manufacturing in the Philadelphia region. So, and this is for the month of May. So in April, we had a pretty high number at 50.2. Forecast is supposed to taper down a little bit down to 43, and it tapered much worse down to 31.5. So these are actually still pretty good numbers, but because everything's been bottlenecked, we're getting a much greater numbers. This is like a 50-year high number we've seen. So this is a very good, exceptional. So we don't usually see them quite this high. Jobless claims. This was last week's report was revised higher from 473,000 people applying for unemployment benefits for the first time to 478. Forecast will come to be a tick lower down to 450, and it came at 444,000 people applying for unemployment levels here. However, the one concerning thing we don't always touch on these, but I kind of like to kind of keep my eye on it is the continued claims. We are seeing people staying on, so that increased versus dropping off. We've been seeing this for the most part dropping, but however, this last week it apparently went upwards, which is not a good sign. Last but not least, we got the leading index, economic index. We got, and back in March, March at 1.3% increase. Forecast so it was calling for 1.4% and it increased to 1.6% in April. So that's good news right there that we're starting to see a little bit more of an uptick right there. Let's jump over to the headline news. We got stocks are up finally after about 3 days of negative territory. They are still kind of going through the Fed minutes right there. They got spooked yesterday. So if you guys were paying attention, as I indicated yesterday, it could get real choppy after that Fed minutes came up. There was talk of possible tapering or discussion of tapering, and they kind of took it. They just saw the word tapering, and they just kind of panicked. Both the bond market as well as stocks kind of took a downturn from there. But they're still kind of looking at, and what they realize is that nothing's really changed. The tapering talk is basically that if we're progressing to the rapidly increasing to the numbers that the Fed expects, then they could consider talking tapering at other upcoming meetings. It doesn't mean that they are anywhere near talking about that. Now, a lot of forecasts are saying that they think by end of summer, around August, September, they might start that consideration. They may start looking into or talking about tapering. So yesterday was more of a panic sell on those, and then today it's much better in terms of stocks showing some improvement, and we'll touch on that. Bonds doing the same thing. We dropped about 20 basis points, touched off the 50-day moving average down here, but now we're up about 19 basis points from here. Now we're up about 19 basis points, kind of making that up as a result. So good news right there. We had pricing for the worst, but now we got that pricing back. So we're kind of back to where we were yesterday, this sideways pattern we've been kind of seeing all week here. So we're kind of back to the same pricing we saw earlier in the week, with the exception yesterday afternoon after those came out. So we did get a spike for the worse on that. All right, and here's yields. Yields are kind of also working its way downwards as well, touching out the challenging here the 50-day moving average and approaching the new technical here, and we'll see how it goes. All right, folks. Again, mortgage rates back to levels before the Fed minutes because we were kind of unchanged for the most part, kind of the same, but we did worsen for slightly yesterday afternoon, but we are improved from that this morning. All right, folks. Again, if you guys got questions about anything, please feel free to reach out. I'm here to help. And you guys have a great rest of your day. And thanks for watching. I look forward to see you guys in tomorrow's video. Bye-bye.